The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the day with the Dax Index like we usually do. You can see we had a little bit of a sell-off yesterday, a little rally today up to the 61% retracement, and now we're looking to see what the next leg is going to be. If we take a look at the FTSE, you can still see that it's by far the weakest. I don't know if it's because of the Russian spies or whatever it is. It is much, much weaker. You know, we have had very, very minor rallies. And so the jury's still out on that one. We'll have to wait and see if that's going to continue to the upside or break down to the downside. We don't know. Longer term, I think it's got a bias to the downside, but we could still get a pretty good rally in here. We're going to change the format here a little bit because I've had two questions over the 24-hour period from some of our listeners here on how I got involved with this stuff with astrology and esoteric stuff. And it basically started it started back in graduate school when I read the book by Eric von Däniken, Chariots of the Gods. I got interested in the numbers that were there through my friend Jim Noblet, and I really, I can understand numbers. I don't understand the math, the heavy math behind it, but I understand, the ratios and stuff. And then later on, 20 years later, I finally ran into Bryce Gilmore, and he showed me how some of that stuff fit together. But I was always interested in the esoterica stuff. And when I was in California and working at Drexel, we were very, very close to the Institute for Metaphysics by Manly Hall that was up on Mulholland Drive. It's a beautiful museum and place for some of these things. And if you ever go up there, you'll really enjoy it. The many movie stars go there all the time. And I didn't go there for the movie stars. I went there basically, to look at some of the art and some of the stuff that were related to numbers and things from the pyramid. I had a really strong affinity to the pyramids after reading Peter Tompkins' books, The Secrets of the Great Pyramids, and how these ratios came together and things like that. And one of my favorite things to do was when I went to that Institute for Metaphysics is to go and look at the beautiful picture by Augustus Knapp of Pythagoras. So this is a picture. It's an oil painting. It's life-size. I mean, this thing's so big you can't believe it. And basically, it shows a depiction of what Pythagoras most probably looked like. They didn't have any sketches of him, but there were descriptions of what he looked like. And from that, Augustus Knapp painted this picture. He painted it in 1929. He was a very, very close friend of Manly P. Hall. And Manly P. Hall was born with a platinum spoon in his mouth. He never went to a regular school. His mother self-schooled him on how to buy art and stuff like that, and that's how he spent his life. And he went into, if you ever want a fabulous book to give to somebody, The Secret Teachings of the Ages by Manly Hall. If you really want to see where some of this stuff comes from, I would highly suggest that book. There's three different ways to get it. One is a black and white soft copy, which is around $70, and then they have the hard copy, which is $125. And sometimes they have available the leather-bound copy. I don't know how much it is now. It was $1,000 years ago. When I bought it, it was $600, and the last time I saw a bid on it was like $1,000. But that is the most beautiful part because it's all all color, and it goes through all the different things of religions and how these numbers come together and everything like that. Now that's just, I just wanted to give you an idea of those are some of the things I did. The other thing that Twentyman and I used to do, because we were always interested in collecting books, based on astrology and stuff like that. So we would also go to the Bodhi Tree bookstore that's still there on Melrose Avenue in Los Angeles, just right it's about a mile away from Cedars-Sinai Medical Center. And they have some incredible stuff there. They buy some collections from old book owners, and they have some really fabulous books. And we would buy these books, and of course, Drexel reimbursed us for everything, so we were able to amass a really great collection. So anyway, that's how I really got started. But one of the things I wanted to talk about this morning is about how these numbers are around Fibonacci and stuff, how they come together. And I hope you'll enjoy this, because this is, I think, very, very important. I'm going to put up here this picture of what numbers look like. Now, here's what Fibonacci did. Leonardo da Pisa de Fibonacci lived in Pisa, Italy, which is about a 2-hour drive west of Florence. And if you'll look at this, basically what he did was he took the world in a paper called Liber Abaci, which means freedom from numbers, and he took them from Arabic numbers and Roman numerals to arithmetic numbers, doing it by numbers 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And 1 and 0 are basically the computer. He supposedly went to Egypt and studied the pyramids, and from that he came up with this sequence of numbers that bear his name, the Fibonacci summation sequence. But this was the main thing that he did. This was the equivalent, folks, of blockchain or the internet. This was 12. Remember, this is 1242 A.D. right before right at the Dark Ages. So you're talking about something that was really, really amazing. Now he got from the royal family of Italy, he got some types of a great award, similar, I believe, to the Nobel Peace Prize, and then he continued to do his research. But there was another gentleman way back it was actually 150 years later than Fibonacci, and his name was Al-Jazeer, and he was from Iraq, and he had done some incredible stuff. In fact, he was one of the people that supposedly built the famous water clock. And if you folks want to see something really cool, go in and Google the water clock, and you'll see what they used for timing way back then before they had electricity and stuff like that. But it's really incredible, some of the mathematical things that this man also did that were really incredible. And he also studied under the pyramids. So the pyramids is basically a library in stone, supposedly. All the secrets of it probably be held for antiquity. But anyway, the simple numbers that we use are basically from Leonardo da Pisa de Fibonacci, and that is really the numbers of 618, 786, 618, 786 are contracting numbers, 1.27, 1.618 are expanding numbers. Now, there's a whole lot of other numbers. Bryce Gilmore teaches in sacred science, the science of sacred science, that the 5 ratios, 1, 2, 3, 4, and 5, and the reciprocals of those ratios basically cover everything that happens in the market. The problem is when you're trading, you don't have the possibility of looking at 25 different combinations. So what we try to do is to look at the ones that pop up the most often. And for my purposes, the ones that seem to be the easiest are 618 and 786 on the contraction, and 1.27 and 1.618 on the expansion. And that's what we try to do when we're looking at these patterns. This all goes back a very, very long way, and what we try to do is to put it into perspective of where we are. When Ralph Elliott wrote his book in 1938, he did not use the square roots of the numbers. I don't think he knew them, but had he known them, it would have been a big improvement on what the Elliott wave does. You wouldn't have to have all these little jiggle-jaggles and subwaves and stuff. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, continuing on this little journey, one of the charts that I just posted here came from Dr. Alan Andrews. He's the fellow who does the median lines, if you remember the Andrews pitchforks. And in 1933, he published his, I don't know which paper it was in or whatever, but it was a forecast of what the stock market was going to do by a man named George Marshall. And Marshall did a couple of these, but there was very little information about him. And Twentyman and I looked, well, Twentyman did the work, but, you know, we looked for him for a very, very long time, never could find very much. Now, I'm not sure. I got this one from our good friend Norm Winsky, and but anyway, it's really really amazing how the guy did so much fabulous work and nobody knew something about it. And I just received a text message from our good friend Bill Meridian over at Cycles Research in Vienna, Austria, and he said that Marshall was using a variation of the Bradley model. Well, that was 13 years before Donald Bradley, published the book, so he must have been a precursor, or I don't know. But anyway, that's the theory behind it. So anyway, it was a very good. There were three of them, I believe. There were three forecasts that he had made, and that is really what it's all about, folks. I don't go into that stuff. I really don't. Someone's asked me a question on this journey that I took, and that I'm still taking, because trading is a journey. It's not a destination. And it's one of the it's one of the best professions you could ever be in, because you're always gonna enjoy it and stay young and meet some really incredible people. You're gonna meet a few frogs along the way. There's no question about that. But 99% of the people that I've come in contact with have been a great deal of source of inspiration, and I really enjoy it to see what. Some of the things that have been able to have happen. Now, next week we're going to have Rich Anderson on, but I wanted to talk just a little bit about the agricultural markets here, folks. This is a chart from Bloomberg, that basically shows the ag index, what it's done over the past year. You can see we were down from 2018. You can see the big ABCD pattern there from 2017 to 2018. We had a rally. If you'll notice that the rally that we just completed was exactly like the rally that we had between June and July before we made new lows. Now what we're going to do is we're going to come down and test if the pedal's going to reach the metal, because if we pull back here and then turn back up, we're going to start a potential bull market in some of these things. And it's set up for it because we haven't had any, crop failures for 3 years now. And that would mean that we're due for one. And the weather patterns are a little squirrely. I mean, Tom was just talking last night about the, snowstorms in Boston, and here it is, just a few weeks from Easter. So I can remember 1964, I was in Chicago. In fact, that's when I was there to meet Napoleon Hill and W. Clement Stone. And it was snowing so bad on Easter Sunday that I think it left 2 feet of snow in 1964 in Chicago. I'm almost sure it was either 64 or 65. I'm pretty sure it was 64. And but anyway, there's a weather. We had a big scare in the beans that year too. So I wasn't trading beans at that time, but I do remember the history behind it. So the weather patterns are a little bit squirrely. So we'll see what happens. Now, one other question that someone has asked me about the mechanization of the Gartley patterns and things like that. And what I'll do here is I'll show you one of our colleagues and one of my students from the UK has done this particular setup that he uses for his computer. And basically what he's looking at here, you'll see he's broken down the ABCD pattern into several different ways that you can see it. There's a lot of different numbers. You'll notice here that he has 382, 50%, 61, 78%, and then he has the D leg. It could be an expansion. It could be a 1.27, 1.618. All of that fits into the program, and what he's trying to do is to match up the ABCD in bars, like 20, as you can see, and then also match it with time. And that's what he's really trying to do. And what he comes up with a probability that something is going to happen at a certain time, and if it does, then he knows what his risk is going to be. If you look at the lower right-hand side, he's only risking 2% of his account, and what he's looking at here is a $300 move on that. And he knows that the harmonic number on this particular thing that he's looking at, which happens to be gold, because he's trading shorter term, basically it's showing that you use a stop of either $11 or $17. Because you're at a smaller area, he's using the stop of $11, and that's what he does. And he follows this, and when he has a setup coming up, this is what that's what he does. And this is a mother God and country. I can't get any clearer than that. And we have that type of pattern happening right now, folks, in the Treasury bonds. We've been talking about that for several days now, getting up to this 145.28. If we get there, that is going to be a very, very interesting pattern to look at in the Treasury bonds. I hope I can post it again. Let me see if I can find it. Nope, as luck would have it, I can't find it, but I'll get it out for the next break for sure. But that's another one that looks real interesting. It follows all of those parameters. It doesn't have all the numbers in, but it has all the patterns and everything else that you need to see if it's going to be the case. Now, the stock market made a really nice ABCD pattern yesterday. We completed it down. We're just a little ways in it in the S&P. We made it in the Dow Jones. But let's just get the S&P up here to take a look at it. You'll see this is what we're watching here. I think there's a possibility we might make this level here. We'll make the 3-drive pattern down at the 2740. That's an ABCD off of the high from the 13th to the 14th. That's also a possibility setting up in here. So we'll see how that sets up. We had a pretty negative day yesterday. The Dow was down about 300 at one point, came back a little bit on the bounce. And, when they give you the information on whether they think it's news related or anything, boys and girls, we don't know, and nobody else does either. The news follows the trend, and I firmly believe in my heart that it's astrological related, but for the life of me, I don't understand it. I understand tiny bits and pieces of it. I understand the patterns, and I can understand the ratios, but the astro stuff, has left the old Cowboys corral a long time ago, and I let smarter people than thy take a look at it. So maybe there's a key out there someday that'll unlock the vault, but you don't really need it, because the vault is that 9-inch cycle between your ears. Once you get that one right, the rest of it is okay, because you're the only one that can control the risk. No astrologer can tell you how much you're going to risk on any trade, that's for sure. But that's usually how it goes. And you're right, Tucker. I've known a lot of people. I know almost all the people that are into astrology, and there's not any of them that have come up with 100%. There's no 100% out there. That's why. And I think the only person that has 100% is God, and she doesn't trade anymore. She's on sabbatical. Anyway, we'll see what happens with some of these markets today, but it's very important that we don't close above 2740 in the S&P today. Should we do that, there's trouble in River City, and we're going down hard. And the bonds are getting ready to top in here, folks. And we're going to post this chart at the break. Bonds look very, very interesting up here at the 145 and change level. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and you can see here we've had this, what we call a dead cat bounce here in the Treasury bond market over the last 3 weeks. You'll notice we're setting right up at the 1.27 level here at 145. There's also a possibility we could expand this up about another 20 pips up to the 145.20 area. Frankly, I think this is probably it, that we're probably going to turn down from this level, so I'm going to nibble at it right here, and we'll be able to see a time to see whether it's going to be, see if this is going to happen or not. Anyway, let's keep an eye on this, because it's going to be an interesting one, because interest rates are going to go higher. They've been in a very, very tight holding mode here for the past few weeks with a, you know, there's just nothing coming in that makes this thing look bullish, folks. Interest rates are going higher. Whether it's going to be related to the U.S. dollar or not, you know, I'm not really sure. Now, I wanted to bring one other factor to us, and that is I wanted to talk a little bit about a trade that Mr. Z put on here in the room here back on January the 5th. He was buying on that little retracement there, cocoa, at the 1850 level with a stop at 1810. And now you can see cocoa has expanded in the last 3 months. Well, from all through January, February, and the first 2 weeks in March, we've gone all the way up to the 1.618 expansion. And this should be the spot where we're going to get a reaction in the cocoa. But it has basically been a one-way carry in the whole way, folks. It's just after, you know, after the 20th of February, it was off to the races. One down day where you had a lower low than the previous day. So that is very, very strong. And any pullback here, if you were able to get a pullback to the 2250 level, which is where the old highs were back in November, and if you did that with a beautiful ABCD pattern, that would be an ideal setup, you know, for a position to look at cocoa for higher prices, because it certainly looks like it wants to go a lot higher. If you remember from that ag chart that we sent from Bloomberg about agricultural prices, we're seeing the same thing in wheat and corn and soybeans. The soybeans, of course, because of the drought that we've had down in Argentina, but that drought is broken. We've broken beans by about 65 cents, and whether they're going to go back to new highs or not, we'll have to wait and see. But the factors are there to make this thing moving. Now, we got a planning intention report on March 31st. It's going to be really big. That's going to tell what the farmers are going to be planting. But believe me, as we go through April and May is when they plant the beans, if the weather gets a little squirrely, they'll switch from beans to corn, and that's why these markets have such wonderful moves, and they do it very nice technically. So let's do that. But a hats off to Mr. Z. He's given some fabulous trades, of course, but that one was the one that he talked about the most because of the fact that it was so low risk and had such a high profit potential. Now, I don't know if John rode the whole thing up for, 7 handles or not, but it was one heck of a move. It never gave you any heat at all, and those are the kind, that look the best. So just watch that and see what's going on. So those are the things that we're looking at from the commodity standpoint this morning, but we got some other things that are going to be happening in the foreign exchange markets because we're at such a critical level here in the euro at this 123.40 level. Right now, what we're seeing now in the euro itself, based on the hourly chart, we're seeing a really nice Gartley getting ready to form around this 123.20 level. That's down 80 pips, which is the harmonic number in the euro. So watch that. If it gets down to that 123.20 level, that'll complete an ABCD structure, and that will make it look, very, very interesting to see here. Now, as we talk about ABCD structures, one of the ones that you want to be watching, of course, is that if we do get a rally in the stock market, that S&P up to that 2773 area, that would be an area for you'll have a beautiful ABCD pattern for a sell. And if you believe that high we made the other day at 2705 is the high, and you want to think of what Gartley had to say, and that is sell the first ABCD correction in a market like that, and you're watching a half-hour chart, that would be your spot. So that would be 2773. That's where your patterns line up, and that's what you're looking for to see if it's going to work or not. Anyway, that's what we're keeping an eye on. The other one is the gold, folks. We had a really strong number coming in here on gold. Let's get this up here this morning because we talked about this yesterday, and it's continued here today. We went right down to 13.20. The low was 13.18, and now we're trading at around 13.20. So it made the 61% retracement. It was an ABCD pattern there. So as long as gold can stay above that 13.18, it's got a chance. But below 13.18, it's got trouble in River City, as Robert Preston would say as he sang the words of West Side Story from Gary, Indiana, back in 1959. Okay, one other question. Some of these questions that you asked me, folks, are related to those, the years at Drexel. And someone's asked, how many of the old Drexel people am I still in contact with? I don't know exactly. Yeah, it was the Music Man. Is that what I said? It wasn't the Music Man. It was West Side Story. It was the Music Man. Anyway, thank you very much, Jim. The ones that I hear from, just on this show here, I get calls, from Drexel customers and people that I did business with that say, gee, I heard you on TFNN and, nice to talk to you. Gosh, I remember the old days. I still have some of the Cougarans and some of the silver that we bought. And, that, sort of makes me feel pretty good. But, I never keep score of it. I just sort of, wing it, and that's about it. I was speaking to Twentyman last night because Syracuse was playing Arizona State, and he wanted to bet a steak dinner on Syracuse, and so foolishly, I would buy the steak dinner anyway, but I lost, so I'm going to buy Jimmy a steak. But anytime Syracuse plays an Arizona team, he always calls me up to scam me out of a $20 steak. Anyway, it was a lot of fun. Anyway, his mother still lives up there in Homer, New York, and Jim's mom now is 97, and she was one of the very first investors in Amgen, her and her husband, and so that has turned out they didn't put a lot of money in it, but it's a lot of money now. And he was a farmer, and he put some of his investment in that, so that's pretty good to see what's going on. Yes, we are getting some breakdown in the cattle market and also the hogs. We're going to see if that continues on, but that's good. That's going to set up a great buying opportunity, about another 3 cents lower in the cattle, but there's nothing to look at that particular point right now. So we'll watch that very, very closely. The outstanding target in the gold and silver, I still believe we're looking at around 1260 in the gold and around $15 in the silver. If we get there, I think that's going to be the kind that you really want to look at and see if that would be the thing that you would like to see. You're right. We are at a critical level in these cattle and hogs. There's no question about it. They're absolutely sitting right at major support. And we'll I'm not touching them today, but I'll look at them tomorrow. And we'll see what's happening, and we'll go from that level right here. Remember, we do have a full moon coming in here, I believe. Yes, they're breaking down, which we said they would if they got below the 67 level, and that's what they're doing in the hogs. But there's so many other great things to trade other than hogs that you look at them twice a year. That's plenty. 877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I posted a couple of charts of the Dow E-mini to show you the action that we had yesterday. We made the big ABCD pattern, and then this morning we've had a pretty nice rally of about 200 points that we've given up 100 of it in the last 10 minutes. So it's telling us it certainly looks like it's getting ready to make another test down here. But it's very important that we hold those lows in the S&P at the 27 40 level. If we go below that, that is very, very bearish, folks. That takes out expansion numbers that have held up for quite some time. Now, a lot of these things, the gold we're trading at 13.18, the euro's trading at 23.34, are related to the foreign exchange markets, and particularly the euro at the 23.20 level. Watch this level very, very closely. Now, again, I urge you to follow the words of my good friend Jim Twentyman, defy human nature, and do the work yourself. And go take a look at a half-hour chart on the euro versus the U.S. dollar, and you will be seeing a classic Gartley pattern forming down here at 123.20 level. Now, it might not hold that, but at that level, you don't have to risk more than 40 pips to see if you're right or wrong, and that's the key to what we're watching here. So just keep in mind that this is amateur hour. You know, the first few minutes of the, in fact, it's the first 45 minutes of the day in the stock indices, and after that, it'll pretty much determine which direction the trend is going to be. But the key level to watch, from my perspective, is 2740 S&P futures, and if you're looking at the Dow E-mini, that would come in at 24,700. That's 100 points from where we are right now. So that's that's what I'm looking at so far this morning. Anyway, that's pretty much it. As far as the grain markets, I believe that we've had some type of a major top occurred in the grains, and what we're waiting for now is to see if we're going to get a situation where they back off a little bit more as we come into the planning intention. There's nothing to do at that point, so that's what we're watching. So we're only about 5 pips away here in this euro. We hit 123.25. 123.20 is the number that we're looking for. So let's see if it gets to that point. Now, another one that looks real interesting, folks, if you wanted to find a really nice pattern to sell, is that crude oil, because we had a beautiful 135 pattern where we had the lower highs this morning, right at a beautiful 61% retracement. So that's pretty much it. Where my alert is telling me that we're getting really close in the euro. It says, Larry, open your eyes. Okay. Anyway, watch this euro, 123.20, see what happens there. and we'll see what's going on. But let's take a look here at this 135 pattern in the crude oil here quickly. I hope I can get this up without breaking anything on the computer. Let's get this in here. I think that'll do it. And then you'll see that we've had these lower highs through here. This sets up a target of around 58.75, folks, if this is actually correct. Now, if we get above the 61.60 level, that would tell us that this pattern is probably not going to work. That would be my guess. So we'll have to just to wait and see if that's going to be the case. I just got a message from someone in the Tiger Den. We're coming down pretty hard here. We've dropped about 20 pips in the euro. 20 pips is not a wide range in the euro, folks. I mean, it's a lot of money, but it's still, you'd want to see something around the neighborhood of about 40 or 50 pips to make it a wide range. So there's not really much that you can do as you're looking at this. So it's just a really big number here. That's all I can tell you at 123.20. It might fail, as many patterns do, but it's got a lot of things to tell you that, hey, open your eyes on this one. The low so far has been 123.20. And whether that's going to be the top or not, or the bottom, I don't know. Well, it wouldn't be the top; it would be the bottom. But just watch that number. That's real money, folks. That's real money moving there. That's not just the funny money that we see in the e-minis and stuff like that. This is real money that these Forex boys play with as they hedge their buys and sells of all the airplanes and stuff that trains. What else they buy in the foreign markets? We'll see. Okay. Another question that someone's asked me is about the Bradley model. Folks, I haven't used it for the past 4 or 5 months because we've had a straight up market and it has been wrong. The Bradley dates have been pretty good, but those have been short-lived too. And of course, Bill Meridian pointed those out to us. We had a really key date in the S&P yesterday on the 14th, and that could have been a high or that might have been a low. We're going to know today, but it's going to be very interesting to see what happens, at that point. So we'll see. Okay, the euro is now trading at 123.26. If you bought it, take your $70, say thank you, Larry, and move on. And that was a joke, boys and girls. I'm just teasing, and I should never joke about the markets. I apologize. Oh, why did I do that? Anyway, we'll see. That's really never. Your subconscious mind does not have a sense of humor. That's really what it's all about. That's really what it's all about. And fact is, let's just change the subject here for a little bit. If you like the gold market, on a small 5-minute chart, we just made a really nice 3-drive to a bottom pattern at 13.17. You don't have to risk much at that spot. So it's a beautiful ABCD on a 5-minute chart. So watch that one very, very closely also. So we'll see how some of these things, unwind. By the way, tomorrow we're going to have Norm Winsky is going to be on because we're getting into the big lunar cycle coming in here on the 17th, which is St. Patrick's Day, and that'll be a lot of fun to watch also. So we'll keep a very, very good eye on that. All right, someone's asked a question about one of the futures. Just a second here, I'll bring up the chart. It'll only take me a minute, and I'll bring it up, and that is the chart of copper. And I just wanted to get you to take a look at this. Here's copper. As long as, we held that 1305 level, as long as copper can stay above 1305, it's still got a chance. But it's looking like it's forming a head and shoulders pattern here, folks, getting ready to break down. I think we got as high as 1318 or something yesterday, but I don't know what the price is today. But that's what copper looks like as far as where it's going to go, from that level. So we'll see if that's going to be the case. All right, let's move on here to the next one that someone's asked us about, and that is these live hogs. And these live hogs, I'm going to show you here. They were in a strong buy, but you'll notice here that they have started to break down. And this is the key here, is that we've gone below that 67 level. And we've broken below the 66.50 level. That's not a good sign for hogs. That means that ABCD pattern that is there is going to measure down to about 64 or 63.50. So you have to stand aside and wait and see. That's what, when you're trading patterns, folks, when the patterns fail, just get out of the way. There's no mistake in being wrong. The mistake is if you stay wrong. That's the worst thing you can do. And having no position is actually a good thing, because that means you have a position. You're thinking. That's the main thing. So having no position is a good thing. Don't have the fear of missing a move or being out of the market. They always give you a lot of chances to get in. That's one of Mark Douglas's favorite fears that he talks about, fear of missing something. Well, they're not going to leave without the train going by at least once or twice, and no matter which market you're looking at. So that's what I'm looking at here. So we'll take a little break here, 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to apologize to everybody listening, and whether you're listening live or archived, I never should have made that joke about the euro. Your mind does not have a sense of humor, your subconscious mind, and really that's a horrible thing to do. My good friend Mark Douglas worked on that for many, many years. Occasionally, because I have a sense of humor that's far from very good sometimes, I just wanted to apologize for it, because you'd never joke about a market like it's going to go here, it's going to go there, and say it in jest of any kind. It's a serious business, and kind of keep an eye on that, because it's certainly very, very important to be looking at. We're right at the moment of truth now here in the crude oil at this 61.50 level. That is going to have to either hold. If you notice this wheat chart, this is Christmas wheat, December, had a beautiful 61% retracement. If you'll notice those little black marks that you see there, all of those have been equal corrections. Those are the harmonic numbers that we see in wheat. So we've just completed that. It's been a nice correction. We're probably getting ready to go higher in wheat. So these grain markets are getting ready to turn, folks. So that's a main thing to keep in mind on, and it should be very, very interesting as we see this. Tomorrow we will have Norm Winsky on as our guest, and I'm sure he'll give us some great information. And that's pretty much. I have the wrong chart up. You mean that the wheat chart is not up? Are you joking me? Shut the front door and raise the rent. Where is it? Here it is. Just a second here. I'm sorry. I thought I was so concerned about the apology that I forgot to put the wheat chart. There it is. You'll see the corrections that we've had here. There's been 1, 2, 3, 4 of them, and they've been all pretty much equal. But the main thing is to watch that 61% retracement from the July high. That was exactly spot on, and the market has broken 27 cents. So that's telling you that the bull market is still intact, but we're having our first correction that we're looking at right here. So keep an eye on this. So live every day in an attitude of gratitude. May God bless. Stay tuned for Tom William and Tommy O'Brien, and we'll have Norm Winsky tomorrow. May God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.